Okay, this is Brian Stoll for Timing Strategies, Tuesday, January the 8th. Real quick, we know what happened, bad day. Let's get down to what we can look forward to and how to manage going forward tomorrow. By the way, we missed a video. We had some technical problems. We went to cash here. We were long as of this day on the 2nd of January. Not the best thing to be, but we were only long 40%. We got out of that. We went flat on Monday. And lucky us, we were short all the way down from number 4 and all the way from this point, but okay. It's an exercise in probabilities. What I'm looking for, what I want to give you real quick, is a symmetry count. And there's a whole lot of stuff going on in the market right now, but I can't cover it all. But what I'm showing you here is a time cycle price count that if you look at the bar time frame from the December 31st high to the November 22nd low, and then we take a time count from the December 11th high all the way to today's low. We have almost the same time values, 17 bars down, 18 bars down. Now if we take a ABC typical idiot wave pattern, and again, idiot wave, Elliott wave, whatever you want to call it, I call it idiot wave, is a tool. It's just like anything in a carpenter's toolbox. You got to know when to use a hammer. You got to know when to use a saw. Sometimes it works beautifully. More times than not it doesn't, but when it does, you got to be able to identify when it very well could work. So we've got a perfect ABC pattern coming from the highs to the lows, back to the highs, and today's lows. Are we going to get long based on that only? No. But if we can get a close back above this level, the 140.75 on the spiders, the number 3 point that we put in, then we might consider it, unless we get a washout of the lows of January, the lows of August, which they're gunning for, my friend. They're going to get it sooner or later. Is it going to happen now or is it going to happen later? It's just a matter of time. If we can get a washout over the next 2 days before that happens, and then we get a close back above that number 1 point, then absolutely we'll get long. Other than that, my friend, this is a bear market. 90% of all CTAs are trend followers. This market is in a sell trend mode on the S&P and all the stock indices whatsoever. Maybe the NASDAQ not, but I just wait. It's in a trend sell mode. Trend following works great at the right time, except you need to know when to work with regression as well, and that's what we try to do here. Another point I want to bring up, what bodes well for a bounce. Let me give you a longer term channel on the SPY, if you can see that. All right, that's kind of tough. All right, but if we take that low from 2004 and manage that channel, that trend channel, we deviated above that, but we're coming into the lows of that channel right now. And the lows of that channel, just on a very short-term basis, come in at 137.5, 137, which would coincide with a washout of those lows on August 16th. So there's a very strong propensity or probability, if there's any elasticity in this market, to get a violent rally back up. You just got to be there at the right time, and that's the art as well as the science to managing it. Everything else, let me give you one last point on what the idiot wave patterns are saying. Let's look at the Russell real quick, the Russell 2000. Long term, or longer term, from the August 2006 lows, we got a bounce at that 618 level at 739.5, held real well for the balance of the year up until what we're getting right now. Now we're at another fib level retracement at that 707, and that also coincides right there at 707, 700, 705, 700. You got to give it a little room for volatility. That also coincides very strongly with that pattern of that ABC high-low move. Is that going to stop it? Are we going to get a bounce? We don't know. Very well could. You also want to be careful in buying that bounce because everybody else that does their homework sees that as well. But there is a very strong rubber band coiled for a snapback back above that move and above that August 6 low. But again, it's a bear market rally as far as I'm concerned. It's just a matter of how to manage it in the short term. Other than that, let's go to the GDX. We were long some gold and some RIDEX funds and some ETFs. We sold those out today based on some retracement values. Also the fact that if you look at the GLD, That is getting ready to top out. Real quick, for those of the fractal pattern basis, if you look at the highs of 2006 to the lows of '06, you got that scallop move that kind of took us up into that 1618 projection at 82.83, and then we got the sell-off that came in also at the same time from that high back down to the lows of 77. Now we're getting that same type of, only on a smaller fractal basis, move back up above those highs, so about 88 and a half or 88 and a quarter. I'm looking to sell gold in the GLD. Okay. Anybody who has any questions, please give us a call, 1-800-675-2131, or drop us an email through the website, and we'll try to keep you updated as best we can through the next couple of days. We are in a very, very volatile time. There's opportunity. We just got to, manage the risk as best you can. To all, a good night, and until tomorrow.